Welcome back. You're watching The Money Show with me, Kavita Thakliyal, and now is the time when we take up viewer queries on our show. And today I have Shweta Rajani answering and doing live financial planning for our viewers. So, Shweta, welcome back, and we will take Savapati's question. And I don't have Mr. Sabapati on the phone line, but then he says that he has an SIP with Zerodha and he wants to understand what is the tax applicable on the earnings if he decided to sell his particular investment.
Okay. So I guess he's referring to an equity SIP because mostly, at least I'd say 70-80% of the times people do SIP in equity funds. So, uh, to answer your question, if it is an equity fund where you have invested, now equity funds, if they are held for a period of more than 12 months, then they are categorized as long-term capital gain. So any gain that you've made on the equity funds, just I'm putting it in numbers for simplicity purpose. You invested 1 lakh as an SIP, the values become 1,20,000. This 20,000 will be called as long-term capital gain if it's held for more than 12 months. What happens is now the government has allowed any gain up to 1 lakh. If it is a long-term gain, it is exempt from tax. If it's more than that, then you'll have to pay a 10% as your tax rate. If the units are held for less than a year, then it is short-term capital gain tax, and you will have to pay a 15% of tax on that gain. I hope that addresses your question.
Exactly. We don't have him on the phone line, so a lot of details which are missing, but then hope that's useful. We move on and we'll take Aditya's question. He says that he's 32 years old and he's currently investing in mutual funds via SIP, and he wants to build a corpus of 25 crores in 25 years, and he can do an SIP of almost 2 lakhs going forward. And the kind of funds he has in his portfolio are HDFC Top 100, Nippon India Growth, SBI Contra, Parag Parikh Flexi Cap, SBI Flexi Cap, UTI Nifty 50 Index. That is what is his fund mix like. Shweta.
Yeah. So I think he's doing a 55,000 of SIP. I went through his portfolio, and the good news, Aditya, is that your goal is 25 crores, and you can achieve that even with a 1 lakh SIP. But since you can scale it up to 2 lakhs, you should definitely do that and have a comfortable goal amount. Coming to your schemes, I just had some observations here. You have an index fund, and you would have noticed in your portfolio itself that the index fund is outperforming your own large cap fund. And therefore it means that a fund manager who's doing active management can give you that 2-3% extra. So you don't need an index fund. You can exit from the UTI index fund. In fact, you can also exit from the HDFC Top 100 fund and instead go in for an HDFC Flexi Cap fund. The other fund that you have is the Parag Parikh Flexi Cap, where I would say you can stop your SIP there and instead go in for a Kotak multi-cap fund. Lastly, you can also go in for an IPRU large and mid-cap fund. The rest of the schemes that you have, the SBI small cap, the Flexi Cap, those are good funds. You can continue with them.
Move on, and we have Mr. Kamal Arora on the phone line with us. Hello, Mr. Arora. How are you doing? Good evening. Thank you so much for sending us your
Yeah, good
question.
evening. Thanks. How are you?
I'm doing good. Thanks. You're calling from?
New Delhi.
New Delhi. Okay, so yeah, what's your question? Something about growth strategy versus value strategy?
Yes, something of that sort. Like nowadays, the value strategy is in vogue. So I want to go for a mutual fund which has basically a growth strategy. Like you buy a high
Okay.
P stock because they also have high growth. So that kind of is there any mutual fund like that? Any
Sure.
scheme like that which goes with that kind of a strategy?
Sure. Mutual funds, when they design their portfolio, they follow different types of strategies. And yes, you have funds following value strategy and growth strategy as well. But then I want to understand your basic purpose for going towards in this direction. Because if you have a diversified portfolio, having a growth strategy or a value strategy is not a primary concern for an investor. But any specific reason why you are asking this question?
Yeah, because see earlier when the interest rates were like low, the growth strategy was in vogue, and now the interest rates have gone up. So obviously the value strategy has come back. But now, as it's so cyclical, everything is so cyclical. So I think now the time will come when the interest rates start coming down. Then the growth stocks, something of those sort like Asian Paints, which are so out of favor right now, will start coming back. So I want to have an SIP in that basically, so that I have a value portfolio. I also want to have a growth portfolio. Okay. India is primarily a growth country, and
definitely.
So definitely. So kind of trying to do my homework and prepare in advance.
Definitely, a very well done homework. I must say that very few investors come up with these kind of questions, which also shows your interest in your investment portfolio and how you have like a hands-on approach. So congratulations over there. Lots to learn from you for our investors as well. But then let's quickly go to Shweta. All right, Shweta, how can he have a growth oriented portfolio and strategy?
Yes, Mr. Kamal, I really appreciate, you've done a good amount of homework, and you're right that in the last 2 years, value as a strategy has been playing out. In fact, there was there was a sense that possibly from second half of last year onwards, we would see the market shifting towards growth. But however, that doesn't seem to have played out well. So it is therefore important that you have both value and growth styles in your portfolio so that you can create an all-season portfolio. And when that happens, you don't really need to frequently churn your portfolio. I'm just going to jump in to give you the recommendations first. So there are schemes which follow the growth style of investing, or there would be blend, but with a growth bias. Just to give you one fund in each category, in mid cap, you'll have a Kotak Emerging Fund. You'll have an ICICI Proof Focus Equity Fund in the focus category. You'll have an SBI large and mid in the large and mid cap category. In the small cap category, you'll have an Invesco small cap. So these are some names which follow growth orientation. But also here we've seen that fund managers are flexible enough to keep shifting between growth and value when the market kind of changes. So it's always better to go for blend than have pure growth oriented funds and pure value oriented funds in the portfolio. But that's my recommendation.
All right, Kamal, is there anything else you want to ask Shweta?
The thing is, see, I just want to ask you, in developed countries, there are a lot of these strategies, growth strategies and value. In India, we do have value funds where the pure value strategies are there. But even I am not able to find a real growth strategy where you buy, maybe a growth at reasonable price kind of a stocks or growth stocks, and then just be on with them.
So I'm slightly running out of time. Yeah, quickly, Shweta, your take on this?
So, one way to identify that is you can look at the PE ratios of the fund, and whenever the PE ratio is higher than the category average, you know that the fund manager is running for a growth style. Second way to check is, this will need some effort, but the way we look at it is what is the earnings growth or projection of the portfolio that the fund manager is running. And, look at his top weightages and see those, specific stocks. These are few ways which we can identify if a fund is growth or value. So, in case you also want to do this check before you invest.
All right, I think that will be all with that. Thank you so much, Shweta, for being on the show and helping our viewers plan their finances and go about with their financial portfolio. But before I sign off, I'm going to leave our viewers with a WhatsApp number and email ID where they can keep sending us their portfolio related queries so that we can do their live financial planning. Thank you so much for watching. Goodbye.